Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories behind company filings. And today we're diving into Lake Superior Acquisition Corp, a company that is trying to make a splash in the market, but has it managed to secure its place, or is it just another fish in the sea? Before we dive in, if you love getting straightforward insights from these complex documents, make sure you hit that subscribe button. And for more direct discussions and early access to our analysis, join our Discord community. The link is in the description below. So, Lake Superior Acquisition Corp, or LKSP, as it is traded, has just made some significant moves. This report details the culmination of their initial public offering, or IPO, which is basically when a private company first offers its shares to the public. Think of it as a company's grand entrance onto a public stage. They are essentially putting themselves out there for everyday investors to buy a piece of the company. This filing tells us that the IPO was declared effective, meaning all the regulatory hurdles were cleared around the end of September and the actual closing happened in early October. They managed to sell a bunch of units, each unit being a package deal of one ordinary share and a portion of a right. This means if you bought a unit, you got immediate ownership with a potential future benefit tied to those rights. The offering price for these units was $10 each, and they sold quite a few, raising a cool $115 million. All that money, by the way, is being held in a trust account. This is pretty standard for companies like this, often called special purpose acquisition companies, or SPACs. The idea is for them to use this money to acquire or merge with another company, essentially becoming that company. They also pulled off a private placement simultaneously with the IPO. This means they sold more units, this time directly to specific investors, instead of the general public. In this case, they sold 360,000 private units at the same $10 price, bringing in another $3.6 million. These private investors, including the company S-Sponsor and a firm called CCM, are agreeing not to sell their shares immediately, which signals a level of commitment to the company. S-Future. This private placement was done under a specific rule, which basically means it was a public offering and was exempt from some of the usual registration requirements. The core of this report revolves around various agreements that were put in place as part of this IPO and private placement. We're talking about things like the underwriting agreement with Cohen-Finnie Company Capital Markets, which is pretty much the deal they made with the investment bank that helped them sell their shares. Then there is the rights agreement and various letter agreements with officers, directors, and shareholders. It is a whole legal tapestry that holds this entire event together. Critically for the company's structure, their memorandum and articles of association have been amended and restated. This is essentially their company's constitution, outlining how the company is run, the rights of shareholders, and the powers of the directors. This change is happening in conjunction with the IPO, which is typical as they prepare to operate as a public entity. It is important to note the agreements being listed, especially the ones involving efficiency, which appears to be the underwriter or a facilitator related to their trust account. This includes an investment management trust agreement, clarifying how the funds raised are managed for the benefit of the company's public shareholders, and a registration rights agreement ensuring that the private placement shares can eventually be registered for public resale under certain conditions. The company also entered into a private placement units purchase agreement with the sponsor and CCM. This just formalizes the sale of those private units we talked about earlier. Now, looking at the numbers here, the most striking aspect is the $115 million raised from the IPO and the additional $3.6 million from the private placement. This gives the company a substantial war chest of $118.6 million to work with. This is the fuel for their acquisition engine. The fact that they've secured registration rights for the private placement purchases is a standard but important detail. It means those initial investors aren't locked up forever and can eventually sell their shares, which is crucial for providing liquidity to them and ensuring the market for the company's stock remains functional. This filing also confirms Lake Superior Acquisition Corp is an emerging growth company, and they've elected to use the extended transition period for adopting new accounting standards. This basically means they get a bit more time to get up to speed with the latest financial reporting rules, which can be helpful for newer companies navigating the complexities of public markets. Now, let's zoom out and think about the story here. Lake Superior Acquisition Corp is a SPAC. These entities are essentially blank checks looking for a target company to merge with. Their success hinges entirely on finding the right acquisition. They've raised a significant amount of capital, which puts them in a strong position to negotiate and acquire a promising business. The key risks, however, are manifold. First, there is the risk of not finding a suitable target within their timeframe, which could lead to the dissolution of the company and a return of funds to shareholders. Second, even if they find a target, the merger itself needs to be approved by shareholders, and there is always the risk of market conditions changing, making the deal less attractive. What we're seeing here is a company that has successfully navigated the initial public offering process and raised considerable capital. Their immediate direction is clear: leverage this capital to identify and acquire a business. The strength lies in their financial footing at this stage. The primary weakness is the inherent uncertainty of the SPAC model itself. The ultimate success of Lake Superior Acquisition Corp doesn't lie in this IPO filing, but in the acquisition that follows. It is akin to putting a down payment on a house. The real test is whether you buy the right house and whether it appreciates in value. Their future performance will be dictated by the strategic acumen of their management team in selecting and integrating an acquisition target. For now, they've done what they set out to do: become a publicly traded entity with the funds to pursue their objective. Alright, that is our breakdown of Lake Superior Acquisition Corp's latest filing. What is your take on the SPAC model and what they might pursue next? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.